Raidas, and welcome to the midweek with Indiacharts. Today we have Jay Vora with us as always. And Jay, I'm very fired up to ask you the questions that we have lined up for you. Let's quickly begin. How are you doing, Jay?
Sure, all good. How are you doing?
I'm doing very good. Thank you so much. So, Jay, what we see is the US market has seen a good up move post Fed speech at Jackson Hole. What were the key takeaways from it? And, in the past week gone by, did we get any important data points from the US? If yes, what were they?
Yes, so actually, market was very keenly watching Fed Powell's speech at the Jackson Hole. So as anticipated, I mean, there was nothing great. Nothing, key takeaways as such, because he was telling whatever he has been saying in the past. The only thing was that he stuck to that 2% inflation mark, which people are feeling that it's a tall ask. Okay. So now many on the street are anticipating that if 2% is the target, then maybe they will have to raise the rate a lot more than the current rate which is prevailing. So that is the only argument, that is there. But I think, as of now, if we go by what the Fed has said, so, there might be one more increase. But I think, looking at yesterday's data, so you asked me that what were the important data points which has come by in this week. So basically it was the JOLTS data, which is the job opening data. So over there has been some cool off and there has been some moderation. So this is, actually this is a bad news ke job openings come ho raha hai. But now at this point of time, bad news is good news. That is because if, there is a weakening, then it means that the Fed is not going to be aggressive and it is not going to hike rates. Okay. But that was only just one data point. Okay. In this week, I mean, today, in fact, we'll be getting a data point. I think today we'll be getting core PCE and all. So tomorrow again, in this next 2 to 3 days, there are key data points that are lined up. Okay. So in the next, 1 week or so, we might be having most of the data points, and post that, the Fed will make an judgment, whether the rate hike needs to be done or no. But looking at the data so far, the JOLTS number are an early indication that, job openings are not as great as it was previous month. So it is showing a sign of cooling off. So basically needs to be seen how the other data point plays out. But broadly, it looks like that the Fed is going to pause in the month of September, and it will need some time to see more how the data is flowing. Okay, for the month of September, October, and that's where probably in the month of November they will take a call whether one more rate hike needs to be done or no. But according to Fed, that one more rate hike could be possibly coming in November, but it might not be in September.
Okay, so it might not be in September. That was very well explained, Jay. Coming on to the next question for you, Jay. How is the setup of the key US indices, dollar indices, gold and silver? Do you think the dollar index is topping out?
Yeah, so this is important. Wait, I'll quickly share my screen.
Yes,
so
please.
when we look at the S&P index, wait a second, sorry. So yeah, when we look at the S&P index and when we look at the weekly chart, there has been a pause in this 3 week of correction, and now it is trying to inch higher. And more importantly, it is trying to inch higher after taking support around the 20-day average and the previous low. So that is a good sign. In terms of overall wave count, we have shared earlier as well that this is wave 1, this is wave 2, and then within wave 3, this is 1, 2, 3. And currently the decline was 4, which we had seen, and now actually wave 5 of 3 is unfolding. Okay, so that means that it should eventually break above the previous high and it should head higher, and most likely in the coming weeks there can be a possibility that even the all-time high can be tested. Now when we see the Nasdaq 100 index, there we have a similar setup, wherein there was a 3 week, 4 week kind of correction that we have seen from the top, and now that seems to be getting over, and it is inching higher. But there is one important thing to watch out for. So when we look at the retracement mark, okay, so from the top to bottom, if we do the retracement mark, so right now they have closed around the 61.8% retracement mark. So typically 61.8% retracement mark is very important on the upside. If that breaks, then that is an indication that eventually it is headed higher towards the new high. Now this setup is also there in S&P 500, wherein it has halted. I mean, it has closed around the 61.8% retracement mark of the fall. Okay, but the good part is that the our proprietary indicator, which is the Rohit momentum indicator, that is RMI, that has given a bullish crossover. So that is giving us that indication that eventually the 61.8% retracement mark should be broken on the upside, and we should be possibly headed higher. Now, this is on the key US indices. When we look at the dollar index, I mean, this is something that we have discussed earlier as well. See, what has happened is that it had broken above this trend line. Okay. Now, what is happening is that in the overall context, okay, this entire thing is a corrective pullback. What do I mean by corrective pullback? So basically, So basically, this decline is the primary trend, which is the trend is down right now. Okay, what we are seeing right now is just a counter trend pullback. Once that is done, ideally the next leg of down move should unfold. So we thought that the pullback was done over here only, but again it has made a comeback. But broadly, if you see, it has not done anything since the start of this year. Okay, so broadly this is a sideways consolidation. So the point is that what will be the factors to look out for? So firstly, the RMI turning into bearish mode, this is first indication that the dollar index can correct. Then we will wait for the averages to break on the downside. Okay, so in this case, the 40-hour average, which is on the lower side, that is at 102.40. So if that breaks on a closing basis, that's where you will start anticipating that a correction can unfold. And also when we look at the weekly chart, okay, there has been 1, 2, 3, 4, 5, 6 weeks of up move, and after 6 weeks of up move, there is first probably negative candle which we may get. If at all we get a negative close by Friday. So obviously we'll have to wait for till Friday to confirm that. But yes, if we get a negative weekly close, and on the daily chart we end up breaking the averages, and given that the momentum indicator is in sell mode, so this will be a good enough indication to think that the dollar index is correcting. Okay, now whenever dollar index corrects, it has a positive impact on the risk assets, so be it equities or commodities. It has a positive rub-off effect. And also when we look at the chart of gold and silver, okay, they are very nicely poised at this point of time. So silver has been leading the rally from the bottom. Okay, and now it is coming to an important resistance level. But also when we look at the weekly chart, okay, so what is happening is that there can be a chance that a weekly RMI can see a bullish crossover. Now again, we have to wait for this confirmation by Friday. And if this week it doesn't confirm, then maybe next week we'll have to check out for what it does. But the setup over here is very interesting. Similarly, gold also, if you see, it broke above the 40-week average for a brief while, but now it has made a very good comeback. And when we look at the daily chart, okay, it has closed above the averages. Now 61.8% retracement of the decline. Okay, again, like I said, 61.8% is very important. So in this case, I think it is around $19.48. So this is spot levels. Okay, so if dollar index closes above that, then again, the gold chart, if it closes above the 61.8% retracement mark, then again it should be positive for gold. And gold, silver, and also similar is the setup on the copper index as well, wherein this was an impulse move, then this has been a sideways correction. and now eventually it should rise higher, in the days and weeks to come. But yes, dollar index needs to confirm that. And also when we look at the weekly chart of copper, it is trying to close above the averages. So if that happens, that will again be a good confirmation as well of an up move. So, if commodities are confirming an up move, if dollar index is confirming a down move, so that would
Yes.
be a greater confirmation and could be good for the risk assets as well in the days to come.
Okay. So, Jay, what do you make of the divergence that we are seeing in the Nifty small cap, mid cap, and even the Nifty index? Do we normally see such divergence? And if yes, what are the implications, Jay?
So yes, see, normally divergence do occur, okay, but typically what happens is that Nifty index actually tends to outperform. Wait, I'll hide the drawings. So yeah, so Nifty index typically, I mean, the large caps basically they outperform, and the mid and the small caps they actually underperform. But this time around, we are seeing something different, okay, and every time we see something new, playing out in the market. And this is one, unique thing that is playing out, wherein the mid cap and the large caps are actually performing very well. And Nifty so far has been witnessing some consolidation. So now many people are bothered about that, and thinking that this can lead to a very big correction, or these are not good signs. But if you see, largely what has happened is that we have seen a lot of rotation in the market. Okay, who would have imagined that Nifty would have been at 19,300 kind of level, but Nifty IT index would have corrected say 20-30% from the top. If you would have asked me around this time, it would have been impossible. I mean, people would have not believed at this story at all, but it is happening. Okay, so basically what is happening is that, see, even in today's market, if you see bank bank Nifty is having a good amount of weightage. Okay, it actually has the highest weightage among the sectors. Then comes the IT index. So usually what happens is that they, when the rotation is happening there, I mean, that is where, we see a lot of rotation between IT and the bank Nifty particularly. Okay. So even in today's session, if you see 0.7 up, that is the IT index, but bank index is down. Similarly, you might see that bank Nifty is up and IT is not doing well, because see, when you see the daily chart, okay, now this is where you will get a clue. When you do the daily chart, okay, see, you can see that it has been consolidating and it has been sideways. Okay, but when you see the bank Nifty chart, okay, it has been rising, and it has been doing pretty well. And while the bank Nifty was correcting, IT was the one actually which rescued the Nifty index. So that's why we don't see a much bigger correction on the Nifty index. Okay, and I think this is what is going to happen. Maybe, see, at some point of time, small and the mid caps, they are also likely to correct or go sideways. Okay, because as you can see, this is the weekly chart of the mid cap index. Okay, and it is at 84 now. 84 is usually, I mean, it is in an overbought zone. Okay, there is no doubt about that. But what happens is that biggest moves actually come by when they are in an overbought zone, because that's where the momentum is very high. Okay, so right now we are seeing a lot of momentum in the small and the mid caps. Okay, now the point is that what is the time when you say that this momentum is fading away, or there is a possibility of correction. So that's where we have highlighted that the 20-day average will be very important to watch out for, because in this entire rally that we have seen from the bottom, the 20-day average has not been broken at once at all. Okay, I mean, each time there has been a test of 20-day average, and eventually it has risen higher. So if the mid cap index breaks and sustains below the 20-day average, that will be the first sign that it may enter into a corrective mode. Okay, it is only when the 40-day exponential average breaks and it sustains below that, that's where you can start anticipating that it is getting into that corrective phase or a sideways sort of phase. Okay, and that will tell you that the momentum is fading away. But until that doesn't happen, ideally you should be with the trend and wait for the confirmation. That is the main thing. Okay, now it is very important for people to understand that, see, if these are the scenarios, okay, then what should we do? Okay, how should we react? So,
Yes.
a lot of time what happens is that there is a lot of subjectivity that comes among us, right? Because we are biased to something we are seeing. So in this case, see, as we do more weekend, midweek episodes, I'll touch upon more and more features of our Strike platform, okay, which we will give the link in the description. But the website name is web.strike.money. So if you have not opened an account, you can open the account, okay, and you can see there are many unique features as well in this. So one of them, couple of them which I'll highlight today is, one is scanner, okay. Now, the reason why scanner is more important is because we are going to see a monthly close, in tomorrow. Okay.
Yes.
So on that monthly close, which are the stocks that are giving a bullish crossover, be it stock or index, anything. Okay. Now I am giving you just one way of, seeing how can, how can you actually sort things out? Like, see, over here, this is basket. So you can take any basket, okay? You can take index, or if you want only FNO stocks to be seen, so you can do that. And if you want individual stocks as well, that you can do. And also, if you suppose want to see only, say, Nifty metal index, okay, then that's where what happens is that the components of Nifty metals will come, and and it will show the output, which are giving you new buy, new sell, like that, okay. So now, we'll just look at, say, indices. Okay, we'll do a top-down approach. Okay, which index is looking good? If that index is looking good, then which are the stocks that are actually good? Okay, so that is how we will approach. This is one of the approach. Okay, I'm not telling that this is the only approach. This is one of the approach. So in which, if we choose only indices, okay, and we do only new buy, so it will throw you the results which are actually going to see a new buy. So Nifty IT comes up in that list. In that, this is a very good setup wherein it has come back to the averages. It has completed the cycle, and now it is, giving possibly a fresh leg of up move, and it is closing above the 20-day average as well. The 20-month average. So this is good. So this is an interesting chart. If you see media, that has been recently in the news, and it has been buzzing a lot. Even metal index, if you see, that is on the verge of now giving a bullish crossover. So obviously we need to wait till the month end, that is tomorrow, for the closing. But yes, it is giving an indication of a new buy. But yes, one thing that people have to remember is that if it gives a new buy, it doesn't mean that you go and you blindly buy anything. Okay, that is the first step in shortlisting what is looking more interesting. Okay, so now supposingly, if I found that say consumer durable is looking interesting, okay, because it has given a bullish crossover, and it is anyways headed higher, because if you see the monthly chart, see, you can see over here almost similar setup, and it is heading higher. So now what do I do is heat map. Heat map is also very unique. So in this, on the left hand side, you will see the performance of the index, okay, and on the right hand side, you will see the performance of the stock. Okay, now over here, the time horizon that I have clicked on is today. Okay, but if you see, the Nifty index has been in a corrective mode since 20th of July. Okay, so what I do is that I come on the platform and I say that I want to see a custom period result, okay, wherein from 20th July, okay, to 29th, how the index have done. Okay, how the stocks within the consumer durable index have done. That is what system needs to show me. Okay, now I can see that Amber Enterprise, Dixon, Whirlpool, Voltas, V-Guard, these are something. These are few stocks that have done very well. Okay, but within the same index, Rajesh Export, then Blue Star Company, this has not done well. So obviously what you would do is that you would like to buy the strength, okay, and sell the weakness. That is what normally people tend to do. Okay. So in that case, Now, supposingly if I selected Amber Enterprise, okay, so what you do is that you simply click on the stock. Okay, now again, as a disclaimer, this is not a recommendation. I'm just trying to show you how you can actually shortlist the stock and how you can analyze. Okay, so in this case, I have analyzed Amber Enterprise. Okay, now when I go to Amber Enterprise, I can simply go to Rohit setup. Okay, which is where we show that how the setup is based on the RMI, which is this indicator, and what the trend is. Okay, what the monthly or the daily, weekly trend, whatever it is selected is. Okay, now when I do a monthly chart, okay, I can see that so over here there is a bullish crossover. When we look at the weekly chart, okay, you can see that the momentum indicator is in bullish mode, and it is trending higher as well. And when we look at the daily chart, okay, when we look at the daily chart, that's where we see that the RMI is in sell mode. But over here, when you see the trend wise, it is rising higher and it is above the averages. Okay, so this can be a good setup. Now again, if you want to remove the subjectivity, okay, so what you can go do is that you can go in scanners, you can go in seasonality. So in this, actually this is one of the new feature that we have put out a couple of weeks back. So in this, the way you can analyze is that the basket which you want to select, what is the look back period. Okay, in this case it is 10 years. Basically it will analyze of last 10 years. Then how much should be your holding period. Okay, so basically if you buy today and you hold for next 10 days, then what can be your return. Okay, that is what it is showing you. So this is bullish or this is bearish. Okay, I mean, you can choose any of them. So if you choose bearish, so you will get all the stocks where bearish returns are there. Okay, so over here you have average return and median return. So we have actually done the sorting based on median return. Okay, because that is the value which has been that is more widely followed. So now over here, when I do Amber Enterprise, okay, now this is the result. So I simply search and I type Amber because that was one of the stock that we have shortlisted. So over here we can see that the average return is 4%, median return is 1%, and if you would have traded for five, I mean, if someone would have taken 5 times today and they would have sold 10 days after that, then they would have earned this much sort of return. Okay, on an average 4%, and the win rate is 100. Now what we do is that we increase the time horizon. Okay, even so when we do 30 days, again we are seeing a positive return, and the strike rate over here actually goes down a bit because in 1 month, in one of the month, it has seen some correction. Now similarly, if we do for say 90 days, okay, so again we are getting this sort of return. So probably even seasonality wise, it is possible, I mean, it is likely that this stock can deliver a good return. Okay, so that is how you can actually analyze. So over here, everything is statistical. Okay, nothing, I mean, here there is nothing that I am choosing based on my bias. Okay, it was like कि scanner में आया कि capital, I mean, consumer discretionary is giving a bullish crossover. So I went ahead and I checked the components of the consumer durable. Okay, so once I checked the components of consumer durable and I got Amber Enterprise. So I went there and I saw the trend. Okay, and it was looking good. So then I came back to the scanners again. Okay, and then I saw what the return of the stock is, okay, on various time frames. So it again gave me a good indication. So that way, and supposingly if people who are following fundamentals, they can also add to that overlay as well. So fundamentals is something that we are building upon right now. I mean, it might take some time, but even that will be built as well. And we will be showing that features very soon.
Yes.
So until then, we have these sort of features, and that is how you can play around. And as the week passes by, more and more features will be added. Okay, so yes, that is this is one of the technique that you can follow. And like I said, this is not the only technique.
Yes.
Okay, people can have technique, but this sort of methods can help you to scan your stocks, okay, and basically narrow down your focus list. Because when you know what you want to do, your life becomes a little more easier. So when you know the list of stocks that are doing good, okay, or that has done good in the past, and currently even statistically they are showing good result, so then
Yes.
the probability of you winning becomes a little more higher.
Right.
So yes, that's it. I mean, that was an attempt to make you go through the strike platform. And also, we have actually a lot of sentiment, very unique, and you can use it for your analysis. So I am very sure you will find the platform very helpful. Just go sign in and take a look at the features. I'm sure it will be a great help to you.
Of course, Jay, that was very well explained. And certainly the features of Strike look to be very promising. I urge you guys to go online, web.strike.money, and get your free subscription today while you're at. And on YouTube, of course, do not forget to subscribe to Indiacharts and Strike at the same time. Search for Strike's YouTube channel, okay? And do not forget to press on the bell icon, because that is when you're going to get an instant notification and you'll be updated on all our videos instantly. That was a wonderful session, Jay. Thank you so much for giving us your time.
Thank you.
Thank you so much. Take care of yourself. Bye-bye.